Well, back then, there really wasn't an institutional energy practice, nor, by the way, was there really an institutional buyout practice. And they were all primarily financially institution derived and were primarily doing mezzanine. Buyouts were being done by firms like Bear Stearns and Oppenheimer, Allen and Company, DLJ, with their own money. And there really was no institutional fund business doing buyout. On the energy side, what you had was 4 or 5 firms, most of which were commercial banks or owned by commercial banks that were doing mezzanine. So you had Chase, I think there was a J.P. Morgan, there was a Smith Barney, there was a Trust Company of the West, there was Republic, and there was First Reserve.
Bill and I first met each other. He was working at Oppenheimer and I was working at Eberstadt. We picked energy in part because we first met each other working on an energy deal. We've worked together, I think, successfully in part because we kind of complement each other. I think Bill is one of the single best company analysts, corporate analysts, buyout analysts I've ever seen. I mean, he's just absolutely brilliant on that front. It was a very different world in those days. We first took over what is now First Reserve. It was basically smaller investments, $5 to $15 million, primarily in producing oil and gas properties in the U.S. A lot of these properties we were buying out of bankruptcies because the industry was in a period of contraction. A lot of bankruptcies going on because of the collapse of gas prices and then oil prices. So a lot of our early deals were buying what were very good assets, just in companies with too much leverage.
It's hard to believe that when we bought the steel pipe distribution businesses from 2 different steel companies, in effect, and they were merged, and the business was 90% distribution, that combination, which at that time was about a $300 million transaction size, would end up being, $30 billion national oil well. We didn't conceive when we were starting a small consolidation of service companies that combination of service companies would end up, merging into a public company and then merging that company into Weatherford's predecessor and then emerging as Weatherford. No.
When I was in banking, I had the privilege of working on a mezzanine financing for First Reserve and got to know the company and the team, and ultimately was presented with the opportunity to join the firm and go work in Connecticut, which seemed like a great opportunity to move from transactional-oriented business to buy-side and ownership, and really, living with the opportunities and the problems of being an investor. 14 years later, what was going to be what I expected to be a short jaunt to Connecticut ends up being a bit of a whirlwind tour of almost a decade in Connecticut and coming up on 5 years in London. The growth of the firm and the opportunities that have been presented, working across the entire energy value chain as being a member of the First Reserve team has been incredibly interesting and exciting, and provided me the opportunity to learn more and do more, every year I've been here. Alpha Natural Resources was one of the favorite transactions. And there's a number of reasons, but I think the two most important ones were the ability to build a real sustainable and large business almost out of the ashes of its predecessors, and the feeling of being able to acquire an asset and turn it around. When we acquired Pittston, they were actively discussing closing the asset and just selling off the pieces for real estate. The ability to buy that asset, put management in place, and then turn it into a sustainable business, and then grow it through all the add-on acquisitions and mergers that we did between adding on AMCI's assets, the El Paso coal assets, and then about 6 other acquisitions, and build that business was a tremendous experience.
Prior to joining First Reserve, I started my career in the energy investment side with a couple large investment banks and really provided the groundwork to then go into private equity, which was an area that I was interested in as I wanted to get closer to the companies and where the value kind of was really created.
It's a great privilege to be partnered with Tim as co-heads of the buyout business. Tim and I both have had a lot of experience at the firm, and quite different experiences in terms of geographically and the types of businesses that we've both been able to invest in.
Taking a larger role in the investing side is always something I wanted to do at First Reserve. Alex, obviously being in London, focusing on our London deals and the European deals, as well as the resource side where he has a lot of history and has done a lot of good deals, makes a lot of sense. And so then together we co-manage really the equipment and services side, because there's a lot of synergies between what we're doing in the United States and what's going on in London. And in fact, actually, it really is an international business, so it makes sense for us to co-lead that. And so that's working out quite well. Certainly Olmsted was obviously an incredible deal at, I think, just shy of 6 times our money in a year. Those don't come along all that often, but that was one that was really exciting. I think everyone, is interesting in its own way and can be challenging. Brand Service is a company that we've been invested in a long time, and it's, I think, a really interesting story where you had someone with the wind at their back. We created value, built value, and then the global financial crisis kind of created a setback, and we had to sit back and question ourselves. We questioned management, and we questioned our business strategy, and brought in some outsiders to help us think about that, as well as just really challenging ourselves. And through that, basically decided we ultimately ended up having the same right business strategy. We had to tweak some of the execution within the company, but we also had the right CEO, and then reconfirmed ourselves to the CEO of the strategy and really just changed some of the execution. And since then, the company has come back and performed really well. So, a lot of the times, the ones kind of you're the most proud of are the ones that you've been through some tough times with, and that's probably a good example of one of those.
First Reserve, as you know, is very global, and 50% of our companies are headquartered outside the U.S. Houston is the energy capital of the United States, and arguably, I think, is the energy capital of the world. So to be in the energy business, one really needs to have a Houston office.
The Houston office is a very tight team. Most of the people who've been here well over 5 years. A lot of them here for 10 years or more. I've been here for 12. Will Honeyborn's been here for 13, I believe. So, a lot of people have been here a long time, been working closely together.
London becomes quite important because it is certainly one of the energy centers of the world, and probably beyond the U.S., it's probably the leading energy center.
Sitting in London, you get a bit of the current two extremes between Europe and what the sentiment is and growth outlook is for Europe, as well as a lot of emerging market influence where you see a lot of transactions and people trafficking through London, looking for capital in London, looking to expand their businesses via relationships in London. It's been a great experience being in London. We have a great team. We had a great starting point. The team has a great global perspective and a lot of insight on different aspects of the business. It's been a real pleasure working with and building that team up. And we've stayed quite disciplined about finding opportunities where we see good growth prospects with great managers and strong exit opportunities. I think Chris Energy is a tremendous example of the ability to build a business with a proven management team, execute upon the strategy, bring in third-party capital through strong corporate relationships, as we brought in Keppel as a co-investor last year, and continue to grow and develop that business. Beyond our assets in Southeast Asia, we continue to see other opportunities in Australia and other opportunities in Northern Asia, and expect that to continue to be a part of our global portfolio.
We've consistently been growing the firm since the very first days when we opened. I think the team, however, continues from the standpoint that if you really look at our people, they come from two places. One, I would say, are the deal people, the financial people. And those people today are pretty much all homegrown, where obviously 30 years ago, that was not going to be the case. So that team continues to grow, and that team is now a homegrown team. And looking at our pipeline of people, I think that will continue.
We've got a really good team here, a big team that we've been developing over the years. I think we have the best team today that we've ever had. And so, the industry itself is always a constant challenge, but also a constant opportunity. But you've got to have the resources to take advantage of it.
We have some really wonderful investors who've been with us a long time. I mean, the state of Minnesota goes to the early funds we took over. We then had people like Kodak, who was one of our early investors and really gave us a good housekeeping seal of approval. But as we moved in the 90s, we were able to successfully acquire some of the large state pension funds as our investors, CalPERS, CalSTRS, Virginia, Oregon, Montana. Washington State, again, Minnesota stayed with us. So it really is, I think, not only a combination of what we brought to the table, but more importantly, the trust that some really outstanding investors placed in us, which really have enabled us to build a company that exists today. We couldn't have done it without the investors. As I said to them, they're the ones who pay our salaries.
Energy continues to be the largest industry in the world. The energy story is very much a story of demand growth, with that growth largely coming from the non-OECD countries. And that growth being met with new technology and the application of that new technology. So that the outlook for energy is both promising in terms of the energy business and also promising in terms of the investment opportunities that result.
30 years ago, when there were 4 or 5 of us sitting around the room, it was an interesting business, but and one Bill and I found intellectually interesting and stimulating. But I never dreamed that 30 years later we would have 165 employees. We would have raised $23 billion. We would have 4 offices in 3 continents around the world. It's just extraordinary.
The best is yet to come. I think we've got really the most seasoned investment team that we've ever had at First Reserve. We've got probably the best investment committee we've had at First Reserve. We have a better awareness of what we're good at and what we're not good at than we've had in a long time. And I think focusing back on our core, what we're good at, will drive really exceptional returns in Fund 13.
I'd like to thank Bill McCauley and John Hill as the founders of this firm to create the opportunity that all of us have as employees and owners of First Reserve to continue to build on the great legacy that they've been able to build over the last 30 years. And I have huge excitement around the opportunities that lie before us and what the team that's here today is going to be able to accomplish over the next 3 decades.
In some ways, what is now First Reserve started out really not so much to be our life, but to be an investment. But in time became our life, and it's been a great life.
Thank you.